Welcome to the world of accountancy. You have studied many subjects until you reach here. But accountancy is a bit different from all those subjects. We know that accountancy is the language of business, isn't it? So from today onwards, we are going to study that language, which are the books maintained in that accountancy and how to prepare all those books and so on. In earlier times, the role of accounting was just a bookkeeping function of the management. But now our days pass on because of the rapidly changing business environment. The role of accountant is more important because rather than a bookkeeper, the role of accountant or the accountant is an important person in the business organization who provides relevant information to the decision making team. So that much importance is given to accounting, and also now a wide scope is there for accounting, like in areas of forensic accounting, that is solving crimes through computer hacking and all, e-commerce and financial planning in each and every organization. Accounting is very much essential. So now or in today's scenario, accounting is an inevitable factor in every organization. As an introductory chapter, we are going to study the basics of accounting. We have 14 chapters and the first 2 chapters are completely theory. And from the 3rd chapter only we are solving the problems. Okay. We know that accounting is the language of business, isn't it? So we are starting with the term business. What is business? Business means buying and selling of goods and services. So there will be many transactions or many events or many activities that is taking place in each day in an organization. So to remember all these numbers or all these activities and their numerical values for an accountant will be difficult. The owner of the organization may be interested to know the financial position, whether the business is in profit or loss, or is there any debtor, that is there any person who should give money to the business, or is there some persons or creditor that the business should give to them, and is there any liabilities for them, and so on. So to answer all these questions or to have a systematic procedure, accounting is developed. To overcome all these limitations, a systematic and a scientific method of accounting was developed by an Italian mathematician called Luca Pacioli. Okay, Luca Pacioli is known as the father of accounting. You must remember this. Luca Pacioli is known as the father of accounting. The basis of nature, a business concern is divided into 3 types. That is a trading concern, manufacturing concern and a service concern. A trading concern means you know already, because a trading concern means it is an organization or it is a concern which buys finished goods from the sellers and they add a certain percentage as a profit and sell that into the market. Okay, example, we can say that a pen, book, paper and so on. Manufacturing concern means they buy raw materials from the sellers, they produce the goods and add a certain percentage as their profit and then sell it to the market. That is, we can say a bakery, that is the items like flour, oil and so on is bought and it is cooked in the shop and it is sold. A bakery is an example for a manufacturing concern. A furniture shop, that is they buy wood from the seller and then they make furniture like chair and table and so on and then they sell it to the market. It is a manufacturing concern because they produce the goods on their own and they don't buy the finished products. So that type of concern are manufacturing concern. And the next category is service concern. Service concern means those concerned which makes use of the services and provides it to the consumers. That is, if it is an educational institution, the institution makes use of the knowledge of the teachers and they provide this knowledge to the students. So example for service concerns will be educational institutions, hospitals, charitable trust and so on. So these are the 3 types of business organizations based on nature. Now based on their type, there are different organizations. Major among them are sole proprietorship, partnership, joint stock company. So these are the different types of business organizations. In plus 1 we are going to study the preparation of trading concern, manufacturing concern and a sole proprietorship. In plus 2 we will study the preparation of service concern and partnership, and after plus 2 you will study the preparation of joint stock companies. Okay. So hope now you got an overall idea about this subject. Okay. Plus 1 accountancy, there are 14 chapters, and the first 2 chapters are completely theory subject, that is we study only the basics of accounting through this chapter, and after that, after the 3rd chapter only, we will move on to the problem. Now let us look the meaning of accounting. What is accounting? What actually accounting is? The daily transactions of the business organization is recorded in a book called a journal, and similar nature transactions will be transferred to another book called ledger, and from that a trial balance is prepared and a trading and profit and loss, and then balance sheet is prepared. That process is known as accounting. So in that term, it is an information system which receives data as input from the source documents, and after that the data is processed and it is summarized and it is interpreted, and that output is given for decision making. You will understand this when we discuss more. Now, what is accounting? Accounting is the art of recording, classifying, summarizing, analyzing, interpreting the financial transactions and communicating the results to the interested persons. This process is known as accounting. That is the first process, recording. That is, accounting means, we already said, if a transaction occur, the accountant will enter that transaction in a book called a journal. That is, if he purchased some goods, he will enter it as purchased this much goods to this much goods from this person, and he will enter it like that, and after that he will classify that all. He will classify all the cash transaction, credit transaction and similar nature transactions. He will classify it into ledger, and he will summarize it, and he will analyze all those transactions, and then he will interpret it. Now learn these terms, you will understand this in detail. When we discuss it more, you will understand this. Understand that accounting is an art of recording, classifying, summarizing, analyzing, interpreting the financial transactions and communicating the results to the interested persons. Now let us look on the definition. According to AICPA, that is American Institute of Certified Public Accountants, accounting is the art of recording, classifying and summarizing the events in a significant manner and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. This definition is important. That is, it is an art of recording. Recording means, we already said, we will record or we will enter the transactions that is occurred in the business. Suppose a sale of goods is occurred, then we will enter it as sale of this asset, this much amount. That type of entering is known as recording. Recording is done in the book called journal. And the second is classifying. That is, we will classify all the journal transactions into ledger. Classifying is done through ledger. That is, all the similar nature transactions will be posted to the ledger account, and after that it will be summarized. Every person in the organization, that is the owners and all, will not be knowing the language of accountancy. So, for understanding them, it will be summarized into a short form. It is done through trial balance, profit and loss account and balance sheet. And analyzing and interpreting. Analyzing and interpreting means, these information, these summarized data will be analyzed. That is, it can be used for comparing through comparative statements. It is used through cash flow, fund flow, ratio analysis and so on. You will study this in your graduation time. Now understand that all the summarized data will be analyzed or will be made to a short form which can be understood by every person. That is through diagrams, through charts and so on, and interpreting through financial transactions. Financial transactions means only those transactions which are in money terms or in money value. These are only recorded in the accounting, and communicate these results to the interested person. Who are the interested person? We will study this. All these transactions will be communicated or will be shared with those persons who are interested in the accounting of that business organization. So this process is known as accounting. So what is the definition? According to AICPA, American Institute of Certified Public Accountants, accounting is the art of recording, classifying and summarizing the events in a significant manner. So from this we can understand the functions of accounting. Which are the functions of accounting? Recording, classifying, summarizing, deals only in financial transactions, analyzing and interpreting and communicating. So these are the functions of accounting. So which are the functions of accounting? You can study this recording, classifying, summarizing, analyzing, interpreting and communicating. Actually that is the function. This is the nature. Okay, deals in financial transaction is the only nature. So which are the functions of accounting? First is recording. That is, all the business transactions or events are recorded in a book called a journal. And after recording, all those transactions are divided or classified or split it into its nature, and depending upon the nature it is divided into different accounts, and that account is known as ledger. The second function is classifying. With the help of different ledger accounts, classifying is done. Now the third one is summarizing. Summarizing means make it into a short form. Interested users or the owner will not be able to know the amount and all in one look. So for that, the classified data will be summarized into a short form, which is known as trial balance, profit and loss account and a balance sheet. And then these data is analyzed and interpreted through different analysis, that is cash flow analysis, fund flow analysis, ratio analysis, through comparative statements and so on. It is analyzed and interpreted into a chart or graph, and this data is communicated to the needy people. Who are these needy people? We will study in detail. So these are the functions of accounting. It is very important. Which are they? Recording, classifying, summarizing, analyzing, interpreting and communicating. Okay, you should study this in this order itself. Now we discuss the functions of accounting. We can look that through a picture. So this is the first function of accounting, that is recording. All the transactions of a business is entered in a book called a journal. Now after bridge course, you know what is a journal and what is a ledger. So this is a format of journal. All the transactions are recorded in this book called a journal. Okay. And the next one is classifying. That is, all those transactions which have a similar nature. That is, all the cash transactions, all the purchase transactions, sales transactions. These are recorded in separate accounts. Okay. That process is known as classifying. That is, dividing all those recorded transactions into a separate book called a ledger. So the accounts are divided into different sections, whether it is an asset, whether it is a liability, whether it is an expense or an income. It is divided into different accounts. And after that, it is summarized or it is made to a short form. That is, all those transactions are summarized in a significant manner. That is, it is having a fixed pattern for entering all these transactions. And after that, it is recorded in terms of money in a significant manner. In terms of money, that is, only money transactions are entered in accountancy, not the work of a labor or the dedication of a manager or the hard work of an employee. It is not mentioned in accounting. Only those transactions which are in money terms, it is recorded only. And transactions and events, all those transactions which occur in a business, it is recorded in the books of accounts. Financial character only, we said that because only those transactions which are in terms of money are recorded, and interpreting the results thereof. That is, through charts and diagram, the results are analyzed and interpreted, and communicating the results to the interested person. So this is the definition of accounting. That is, according to AICPA, accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting the results thereof. So this is the definition. Who are the users of accounting information, or who all persons are interested in the books of accounts to see the books of accounts? Who are the interested users of the accounting information? Now, these are the persons who deal with the business. That is, there will be a labor union, board of directors, employees, managers, partners, customers, and lenders, researchers, suppliers, owners, government agencies, investors, and so on. So, there will be different persons who is interested in the accounting information. Now, let us look this in detail. The users of accounting can be divided into two types, that is the internal users and the external users. Internal users are those users which are within the organization or inside the organization. These users will be interested in the accounting information. These internal users are also known as primary users. Okay, so internal users means those users which are inside the organization. They are also called the primary users. Who will be the internal users of an accounting information? That is the employees, the laborers, staff, managers, managing directors, and so on. These are the persons or the chief executive, finance officer, marketing manager, supervisors. That is all those persons who are inside the business organization. They are known as internal users. Okay, these are the internal users of an organization. And next is external users. External users means all those users which are outside the organization, that is, they are the secondary users. That is those persons who like to invest in the business, those banks or lends who lend money to the business organization in case of a needy situation, the labor unions for solving the different conflicts between them, tax authorities to know how much, what is the financial position, how much amount is our profit, and so on, to know the customers, that is whether this business is in profit or not. So these are the external users of accounting information. Okay, so these are the two users. Next, which are the branches of accounting? There are three branches of accounting: financial accounting, cost accounting, and management accounting. Let us study this in detail. First one is financial accounting. In financial accounting, the books of accounts prepared is journal, ledger, trial balance, profit and loss account, and balance sheet. Financial accounting is prepared to know the financial position of the business. That is whether the business is in profit or loss, or that is the aim of preparing financial accounting. So financial accounting is a type of accounting which is prepared to know the financial position of the business, that is to ascertain whether it is profit or loss. Okay. Now the second type of accounting is cost accounting. Cost accounting is prepared in order to ascertain the cost of the organization or the cost of the product. That is, to control the cost, to reduce the cost, what all measures should be taken. That is the aim of preparing cost accounting. So cost accounting is a branch of accounting which is prepared to control and reduce the cost or to ascertain the cost of a product in an organization. So that is cost accounting. And the third branch is management accounting. Management accounting is prepared for the decision making purpose. It is an extension of financial accounting and cost accounting. All those data that are financial and cost accounting, all those information is converted into another form which is done for decision making purpose. So management accounting is mainly prepared for the decision making purpose. Okay, so these are the three branches of accounting, which are the financial accounting, cost accounting, and management accounting. Now next we are going to study which are the qualitative characteristics of accounting information. The first characteristic is reliability. That is, a user can depend on the accounting information. All the accounting information will be based on a relevant data. That is, it will be free from error and it will be biased because there will be an evidence. All the transactions are recorded on the basis of source documents. We said that there will be invoices and vouchers. and based on that evidence all the transactions are entered in the books of accounts. So a person can depend, or a user must be able to depend on the information. So accounting data is reliable, that is, a person can depend on accounting data. Next is relevance, that is, whenever we need that information, it is available in time. Only relevant data is recorded in the books of accounts, because this information is needed by the management for decision making. So only correct information or only relevant information is recorded in the books of accounts. And next is understandability. That is, accounting information must be interpreted by the users in the same sense as it is conveyed to them, because this information is needed by different users in the organization. We discussed it. So for that, it must be interpreted by the users in the same sense as it is conveyed to them. So it should be understandable to the users. Not only an accountant, but also each and every individual should be able to understand the topic, or should be understand the event. That is why accounting information is prepared. And the next one is comparability. That is, the information must be able to compare between different sections. Accounting information of an entity must be able to compare on different period and between different entities. That is, an accounting information of 1 year should be able to compare with that of another one. In that way it will be set. So accounting information should be able to compare. So this is an important characteristic of accounting information. It should be comparable between different periods or between different organizations, that is entities. Okay. Next, which are the objectives of accounting? Why is accounting prepared? Which are the objectives of accounting? Because to maintenance of records of business transactions. We know many transactions occur in a daily basis. So it will be very difficult for an accountant to remember all those transactions. Okay, so to overcome this limitation, the accounting information is done to maintain the records of the business transactions. So when every transaction occurs in a business, they will maintain this in the books of the accounts. So the first objective is to maintain a books of accounts. Systematic recording of transactions, proper and complete recorded information enable verifiability and evidence. So there will be evidence, that is the source documents will be there. Based on that source documents, the accounting will be done. Okay, so the first objective, or why is accounting needed? Accounting is done in order to maintain the records of the business transactions. So that is the first objective. Second objective is to calculate the profit and loss, because we wanted to know whether the business is in a profit or loss. So in order to know that, accounting information is prepared. That is to compare the income with the expenses. We will be having different types of incomes. That is, we will be having sales, and we will be having the closing stock of the previous year, that are our income. So to compare with the income and expenses, like we will be paying cash for many items, for advertisement, for salary, for paying rent, for paying commission, for paying discount and all. So there will be many expenses and many income in an organization. We should be able to compare the income with the expenses. Then only we will get the profit. We know profit is equal to income minus expense. That is, whatever we are getting less whatever we are paying, that is profit. No. So profit is equal to income minus expense, and then what will be loss? Loss will be expense minus income. Okay, so in order to ascertain the profit or loss of a business concern, accounting information is required. So that is the second objective. Third objective is depiction of financial position. We already said, that is, accounting is prepared in order to know the financial position of a business, whether it is in a profit condition or it is a loss condition. So in order to depict the financial position, accounting information is prepared. Ascertaining the financial position of the business, it shows the value of assets and liabilities. That is, to know the financial position of a business concern, a balance sheet is prepared. Okay. So the third objective is depiction of financial position, and the fourth one, providing accounting information to its users. We said that there are internal users or primary users and external users or secondary users. So these users will be needed the accounting information. So accounting information generated in the form of reports, statements, charts, graphs, etc. Different users need different information, internal users and external users we have already discussed. So providing information to these users, accounting information is prepared. So these are the objectives of accounting. The first objective is to maintain a record of business transactions. Accounting information is prepared. And next one, to calculate the profit or loss, to ascertain or to depict the financial position of a business. And the last one is providing accounting information to the users. So these are the objectives of accounting information. So today we discussed about the meaning of accounting, definition, objectives of accounting, functions, qualitative characteristics and branches of accounting. Hope you understood today's class. If you have any doubt, you can contact me. Thank you.